cost accounts, and then these are our objectives for today. By the end of the lesson, the student should be able to make appropriate entries in the journal under interlocking cost accounts, and then make entries in cost ledgers under interlocking cost accounts. So these are our two objectives for today. Okay. So now, last week we looked at two different types of keeping accounts under cost accounts. We said we have interlocking cost account, and then we have the integrated cost account. With the interlocking, we said that here basically you maintain two separate books of accounts. That's the financial ledger and the cost ledger. Okay, so two separate books are being maintained under the interlocking cost account system. And then you need a common ledger to link these two accounts together, which is the cost ledger control account. All right. Then we also have the integrated. So we said for the integrated, accounts are both accounts, that's the cost and the financial, all are being kept. Transactions pertaining to these two accounts are being kept in one book. Okay. All right. Our focus will be on interlocking. Okay. So today, as the objective said earlier, we'll be looking at some basic transactions and then their corresponding entries. Okay. It is very necessary we do this. All right. Now, we have a transaction before us. So we have the transaction, then the entry, the appropriate entry also there. So purchase material. Purchase material. The corresponding entries are: we debit our store's ledger control account, and then credit our cost ledger control account. Yeah, Shina. Yeah, Shina. You raised up your hand.
I say it's okay. So first I couldn't see the screen.
Oh, okay. All right. All right.
And now I can see it.
All right. So we debit store's ledger control account, and then we credit our cost ledger control account. Why do we have to debit store's ledger control account? Yes. Why do we have to debit store ledger control account when we purchase material?
So because materials were purchased, so the materials that are purchased, they are being brought to the store. So the store ledger control account to be debited.
All right, thank you. Shina, you also raised up your hand. What do you have to say?
Says because the store's ledger control account shows material received. So when you are receiving, then you debit.
All right, thank you. So that is it. They've said it all. So we said that the material, we said the store's ledger control account records all material transactions. Okay, in terms of materials received, issues, etc. Anything that has to do with material affects the store's ledger control account. You got it? That is why we need to debit it. Then, you know, every transaction needs to be recorded twice. So it's going to affect two major books. If this had been under financial accounting, maybe thinking of open some other account, but no. Here we are maintaining the interlocking cost accounting system. Okay, so to be able to complete a double entry, you need to record that in the cost ledger control account. Okay, which is more like a mother account under the interlocking cost account system. Okay, all right. So that is that. Then transaction 2, materials purchase to production. Materials purchase to production. Materials purchase to production. Yes. So the corresponding the entries, we debit work in progress control account, and then we credit our cost ledger control account. So let me ask, why are we debiting work in progress control account? On in the work in progress control account. Okay. And here the transaction is that materials purchase to production. So you can easily trace the material to where? The place where production is being undertaken. Okay. So more or less, it's more like a direct material. You get it? Material purchase to what? Production. So we have to debit our work in progress control account and then credit our cost ledger control account. All right. Then our next transaction, materials issued to production. Materials issued to production. So here we have to debit our work in progress control account and then credit our stores ledger control account. Why are we crediting stores ledger control account here? Shepherd.
Sir, please, I want to try.
All right.
Sir, please, because it shows with materials received and issued in the store.
Yeah, you mentioned two things. You said receive and issue. So be specific. Why are we crediting it now?
So because it's showing materials issued in the store.
Okay. Yes. So I think Jones also wants to say something. Yes. Yeah, Jones.
Because that's where the materials which stores ledger giving out the materials to the work in progress for the production. That's why we credit stores ledger.
All right. So yes, so you are both correct. So here, what is happening is that we are issuing. So goods are leaving the store. You get it? The first transaction, we purchased. Goods are coming in. That is why we debited stores ledger control account. Okay? But here, we are issuing out. Material issued to production. You get it? So that is it. You are correct. So we are issuing out. Therefore, we have to credit the account. Okay? Material is leaving the store. All right. Please, before I move on to the next slide, any question?
No, sir.
All right. Yeah, so you are still on the transactions. So here we have normal loss of materials in stores. Normal loss. So here loss has been incurred. You know, we have abnormal losses and we have normal losses. So here, we're incurring normal loss of materials. We lost material. So the double entry, we are debiting factory overhead control account, and then we are crediting stores ledger control account. So now, let me start with the easy one first. Why are we crediting stores ledger control account? Normal loss of material, and we are crediting stores ledger. Why are we crediting stores ledger? Yes, Shina.
Say it's because materials are leaving the store, like
All right,
it's being wasted. So
all right, okay. Normal loss, yes. So once you are making a loss, something is leaving, right? You are not gaining. So you need to credit the account, okay? All right. Then we debited factory overhead control account. So why do you think that account has been debited? Factory overhead control account. That account has been debited. Why has it been debited? That, okay? Then we have our abnormal loss. Abnormal loss. So this is also another loss. So therefore, the store's ledger control account will have to be credited. Okay. Then here, it is going to affect our costing, profit, and loss account. So we are debiting our costing, profit, and loss account. All right. When we're reading about some of the accounts, and we looked at costing, profit, and loss account. Okay. And we say that usually abnormal losses are debited to this account. Okay. If when there's any abnormal loss, the costing, profit, and loss account will have to be debited. If there is any under-absorbed overhead, it will also have to be debited to this account. Okay, all right. Then let's move on to the third one. We have cost of finished goods transferred. Cost of finished goods transferred. Okay, so that we are debiting our finished goods control account, and then we are crediting work in progress control account. Debiting finished goods control account, and then crediting work in progress. So when you read on these two accounts, for instance, the work in progress account will tell you that what this account is being credited with cost of finished goods transferred, right? Yes. So basically, that is it. And also the debit side to tell you that finished goods that has been transferred is usually debited to the finished goods control account. Okay. All right. So that is it for this slide. Then let's move on to another slide which has to do with the transactions again. So today, more of our focus will be on some of the major transactions that we will be using as we move forward. Okay. All right. So here, the entries are: we debit our wages control account, and then we credit our cost ledger control account. Okay. Wages paid, wages incurred, you debit your wages control account, then credit your cost ledger control account. All right. Then we move on to the next one. You know, wages can be divided in two major forms, can be direct or indirect, right? Direct wages allocated. Direct wages allocated. Yes. So we debit work in progress control account, and then credit wages control account. Now, why are we debiting work in progress control account? I want someone to tell me. Why are we debiting work in progress control account? Yeah, William Shepherd.
Sir,
Yeah.
sir, please, because it deals with direct wages.
All right. So when we read the theory aspect, okay, we were told that direct the work in progress account records direct material, direct wages or direct labor, direct expenses, factory overhead absorbed, right? Yes. So that is why we need to debit that account. Okay. Yes. Then we credit our wages control account. Okay. All right. Then the last transaction on this slide, we have indirect wages allocated. Indirect wages allocated. Indirect wages. We debit factory overhead control account. So let me ask again, why are we debiting factory overhead control account here? Why are we debiting factory overhead control account here? Mm-hmm. Yes, Shepherd.
Sir, please,
Mm.
because it deals with indirect wages.
All right. Okay. Yeah. So that is it. Okay. So let me just say something brief. See, for instance, the first transaction, they said wages paid. Okay. And then so basically the assumption is that it is made up of the direct and indirect. Okay. That is why they decide to debit wages control account and then credit cost ledger control account. But when we are supposed to prepare cost accounts, okay, this is how other accounts will be affected. So for instance, when we have direct wages allocated, okay, in a question, we are supposed to debit your work in progress control account, credit wages control account. Then when you have indirect wages, you debit your factory overhead control account and then credit your wages control account. At the end of the day, you balance off that account. When that account has been balanced off, you are supposed to send the difference to the cost ledger control account. That is why for the first transaction, they decide to debit wages control account and then credit cost ledger control account. Okay. We'll be looking at some further examples on it as far as preparation of accounts are concerned. But just take notice of this, that at the end of the day, when you are closing off or balancing off your wages control account, the difference, okay, will have to be sent to the cost ledger control account. So you are not going to have balance border, balance CD when closing up the wages account. No, the difference will be cost ledger control account. You get it? These are some of the things you have to take notice of. Okay, all right. Then I think these are some of the major entries that we'll have to look at. Okay, then let's move on to our next slice. Yes, we have sales revenue. Sales revenue. So for sales, as you know, even financial sales usually always credited, right? All right. So for sales revenue, we are debiting our cost ledger control account and then crediting our sales account. Okay. We are debiting our cost ledger control account and then crediting our sales account. Okay. So when you credit your sales, the corresponding entry will be found in what? The cost ledger control account. All right. Then the next one we have cost of sales. Cost of sales. For cost of sales, we are debiting cost of sales account. Okay, because when you read, it just says that we are supposed to debit the cost of sales account with any transaction that ought to affect it. Then we credit our finished goods control account. I think I asked a question earlier on the items that ought to affect this account, right? And then I think Shina, was the one who told me that, okay, we'll have to credit that account with the cost of sales. Okay, so when we debit our cost of sales account, we credit it with the finished goods control account. All right. So I'll pause here and then make room for. All right. So that means everything has been understood perfectly. Cost of finished goods transferred. So we are debiting our finished goods control account because we read that we are supposed to debit it with finished goods control account. Okay. Then we credit our work in progress control account. Okay, because last week we were told that finished goods, cost of finished goods transferred is supposed to be credited to the work in progress control account. Okay, all right. So these are some of the major transactions that we will be looking at. Okay, all right. So let's move on to the first illustration. The first illustration. So this is an illustration, and this is a past question. Yes, so as you can all see it, I'll give you some few minutes to read through the question, then we'll move on with the work. So with this, the requirement is that we prepare a journal, okay? So usually for interlocking, there are two major things that they may request from you. Either prepare a journal or prepare cost accounts. Okay, those are some of the two major things. So either prepare a journal or cost account. So the requirement for this question is that we prepare a journal. Okay, a journal is quite simple. So the requirement is that we prepare a cost journal. So I'm giving you some few minutes to just look at the question, then you will tell me the respective entries that are to be made. So the first transaction, we have material purchases. Material purchases. All right. So, Amanyo, what will be the right entry or entries for this transaction? Material purchases. Yes.
We debit it to the store ledger control account and credit it to the cost ledger control account.
All right. So that is what Jessica is saying. Let's cross check now. All right. So we debit store ledger control account and then credit general ledger control account. 250 each. All right. Thank you. That's correct. The next person on my list is William Shepherd. So William Shepherd, give us the appropriate entry for materials issued to production. materials issued to production. Yeah.
Sir,
Yeah.
sir, please, materials issues to production will debit um, work in progress control account, and then we'll credit stores ledger control account.
All right, let's check whether it's correct. So we debit work in progress account and then credit store ledger control account with 220. All right, thank you. That's nice. Then the next person on my register
Sir.
is Shina. Shina is the next person on my register. Yeah, so Shina, the next transaction, direct wages paid. Direct wages paid. What will be the appropriate entry? This is cost journal.
So debit wages control account and credit cost ledger control account.
All right. So let's check. So that is it. So I was saying something earlier on about these two accounts. And I was like, okay, because this is a cost journal, okay, it is going to affect wages and general ledger control account. But had it been that we've been asked to prepare cost accounts, then that means this transaction, direct wages paid, it is going to affect work in progress control account and then wages account. Okay, but because it's a journal, it's going to affect just wages and then the general ledger control account. Okay, because even if it should affect wages in progress control account, at the end of the day, we will have to send the difference to the general ledger control account. Okay, you get it? All right. So the next one is indirect wages, and it's just the same thing. So that one I wouldn't give it to anybody. Okay, it's just the same thing. So it's going to affect wages and then the general ledger control account or the cost ledger control account. Okay, all right. Then the next transaction is factory overhead incurred. Factory overhead incurred. And the next person on my register is Welenu Evelyn. Welenu Evelyn.
Hey, but wait. You credit it in the wages control account.
Okay, why are we? Why wages? Because we do not have wages here. We do not have anything relating to wages. So one thing is you are late to class today. Okay, you are very late. And were you able to read on the reading assignment I gave you on the ledgers? Were you able to read on that? The presentation is supposed to look like. So that's it. And you can realize that when we are recording the items, they are not in line. Like the debit entry is not in line with the credit entry. You realize that the credit entry is a little bit ahead of it. Okay, so that's also another technique you need to take notice of. Okay. All right. That's for. Then let's move on. We are left with some other transactions. So let's move backwards and then see what we have to do. All right. So the next one is selling overhead on goods sold. Selling overheads on goods sold will be debited with the amount which is $24, and then selling overhead control account will be credited. Okay, that is it. It's as simple as that. Okay, then let's look at the next transaction. cost of sales. Cost of sales. That was what we said. So this is going to look like. I think that's the eighth one there. So we debit cost of sales account with 110 and then credit our finished goods control account. Okay, that is it. Cost of sales. You debit cost of sales account, then you credit finished goods control account. So that is all that they've been asking you to do. Okay. All right. So this brings us to the end of today's class. Okay. If you have any questions, suggestions,
So we say right now.
you may put them on board. But you came in late. You came to class after an hour, after we done an hour. Okay.